Hi, this is Joseph. In this video, I want to show you a relatively simple way of calculating and trading reversals. So you want to calculate when price is going to stall, where it's sort of getting tired at certain levels, and it's going to reverse. You want to be able to trade that reversal with confidence, and the reversal itself has to be a sustainable move so that you can profit in the trade. So let me show you what I'm doing here. This is a 15-minute chart. This is the euro, and the only indicator that I'm using here is volume. So I call this exercise counting the waves. I do this with all of my coaching clients. There's a whole module in my coaching course that teaches you precisely how to do this on all time frames. Now this method can be used on all different time frames. You can use it on a 15-minute chart. You can use it on a 5-minute, 1 hour, daily, 4 hour, any time frame you want on any currency pair or any stock, whatever it is that you're trading. This is one of the ways that you can identify where these major reversal points are going to take place, either at support or resistance. Now, I am going to bring the chart down here because I want to show you that there's a resistance level here. This resistance level here where I'm moving my cursor, that is also viewable on a 1 hour time frame or a 4 hour chart. So you need to be able to step back and take a look at the overall big picture. So I know that price here isn't really touching and it's staying away from that resistance level. And that sometimes is a clue in itself, but that's not enough. So one of the things I see a lot of traders make the mistake is that they will use, let's say, simple indicators to confirm their reversals, and that doesn't always work. You've probably heard before that a lot of indicators are more or less lagging indicators, and this is the reason that we use volume. Volume is, in my opinion, the best way to do this. I'm not saying that it's the only way. I'm just saying that it's the best way. If you want to eliminate some mistakes where price prints like a reversal candle and then you sell it and then it reverses and goes right back up and then the trend resumes to the upside. You don't want to be on the wrong side of that. That's a head fake and you want to avoid that. So let me walk you through what we're doing here. Again, this is called counting the waves. So you can see that there's an up wave, a pullback, there's a down wave, another down wave, up waves. So we're going to open this up and I'm going to walk you through exactly what I'm doing here. By using volume, what I'm doing is counting the amount of volume or activity in these particular waves that I'm tracking. So in this up wave, we have 5,500 contracts traded within that particular wave. So again, this is a 15-minute bar chart. This again could be let's say a 5-minute chart. It could be a 1 hour chart. It doesn't matter. The principles still apply on all time frames. And then we get this one bearish candle that stops there around this area of resistance, and that prints 1217. And then we get one last final up thrust. That only prints 689. Now you can see here with the amount of effort and the way that candle or that bar closes that it's not making any progress. There is a little more activity, but it's diminishing. 689 versus all of this activity here, you can see that things are slowing down. And then you get this one wave, this down wave here. There's 3 bars here for a total of 2305, 2300. So that is a pretty significant reversal. That's much more substantial than the previous bar there at 1217. So we know that things are starting to turn around. And then we wait for a test. Now the test is going to be one more push up. That is 1,430 contracts. You can see compared to the 689 that it's still quite a bit more on that one bar, but it's still not able to breach above this area of resistance or even tag the overall resistance level here at that resistance marker. So at this point, we wait for the reversal. In this one bar right there, that reversal after the last final test, that bar right there prints 758. Now that would be the entry, and we could put our stop just above the resistance level here where you can see where it reads 689. That would be one location, excuse me, one location. And then we would short it, and there's approximately 25 pips profit here at to the lows. So again, we're counting the waves along the way. We're counting the waves to the downside, and you can see that there was an accelerated move within these 2 bars here for 69.40. 69.43, and then it stops, and then it starts to pull back up again, and we're counting these waves on the way back up just so we have a point of reference. Now you want to be paying attention to the time. This is right around the London Open when this is taking place. This is prior to the London Open. Sometimes you get a little activity before the markets open, and then you get this kind of activity, and you want to know what to do next, right? If you're trading the London or you're trading the New York session, you want to know what's taken place at the London Open, the high and the low, what took place during the New York Open, the high and the low. These are going to give you a point of reference. Now we start to move into the New York session, and you can see here that it starts to print another move to the downside, 68.65 within these 2 bars for this downswing, and it starts to diminish, right? The next downswing is 32.53, and then it starts to make an accelerated move up. So we have 4 bars 4 15-minute bars, printing a total of 12,768. That's the amount of activity in that one price swing. That's pretty significant, yet it still cannot breach the resistance from the opening, right? At the beginning of the trading session. So we get another pullback, and then we get one more last test, just like we got here. We had the high, we had the up thrust, and then we had another test, and then it started to resume on the way back down. The same thing is basically the same thing is happening here. We have another move, accelerated 12,700 approximately, and then we pull back. We get another up wave, 62.51. And then we get one final test. Now, at one point, this bar right here that's red, this bearish candle, this bearish bar, it was a pretty strong bullish bar. But again, it still didn't breach that resistance level right here. And you can see that what it did is it spent most of the time selling off after it pushed right into that area of resistance. You can see by the way that candle or that bar closed. The open and the close tells you quite a bit, and the range tells you quite a bit, and the volume tells you quite a bit. So again, one bar right here printed 64.14. That was almost as much as these two bars here. That was quite a bit. You can see just that one bar right there rejecting this area of resistance. So at that point, we can easily get in on the close of that bar, putting our stop above this resistance line. And then we can short it again for another 25 or 30 pips to the downside. And you can see how fast and accelerated this whole thing took off. It is really easy when you start to count the waves. And the reason that you want to start to count the waves is you start to see the inside, the way price action works. So you hear a lot of people talk about price action, but they don't describe it in this manner. They're not counting the waves. They don't understand the amount of volume and the amount of participation and that constant battle of supply and demand. People talk about supply and demand, but they still don't explain it correctly, and they don't teach you how you can track it on the charts. You need to be able to see that constant battle of supply and demand and see who's winning and where these turning points are. You can do this on any time frame. You want to practice this. It does take a little bit of effort because you're watching bar after bar or candle after candle. You can use a candlestick chart as well. I do too. My coaching students do the same thing. I prefer to use bar charts because it forces me to focus in on the action and the range that's actually taking place instead of just waiting for a specific candle pattern. Waiting for specific candle patterns can sometimes also be misleading. How many times have you seen that happen where you see a picture perfect candle pattern and it doesn't go the way you expect it to and it reverses and you get stopped out? This is going to help you avoid that. Focus in on the range, focus in on the amount of activity, that supply and demand, that footprint, that signature that we're looking for, and you'll be able to, with practice, be able to identify these turning points with accuracy, high accuracy. And then, of course, you want to be able to calculate where your take profit levels are. And that's another video that we'll talk about coming up soon. So if you have any questions about this, you can send me an email, or you can also visit my website, forexdaytradingacademy.com, and get a lot more videos just like this.